Dear trading friends, new week, new luck. Let's find a few trades. No, of course not just by chance. What we're actually doing is looking for probabilities here to see how things might develop in the near future. I mean, you already know the long-term options. For those who aren't familiar yet, the first target level we have up here is between 101,000 to 108,000 US dollars for Bitcoin. But we also have a bearish target level, which could still be between 76 and 66,000 US dollars. And unfortunately, this also overlaps quite a lot with the 0.5 Fibonacci level, which is around 70,000 US dollars, calculated from the bear market low to the all-time high. And here at the all-time high, we also reached target levels, which were triggered several times before we had this really severe crash. And I also shared with you why I was selling and similar things. So when I show you something today, don't just dismiss it because you're bullish or because you don't want to see it, simply because you don't want to take further losses with your coins. Please take this to heart and see it as a probability. The probability that I told you about earlier has also come to pass, and it went even much lower. Accordingly, you should at least be prepared for it. And I want to share this with you again, because if we look at the 1-year liquidation heat map for Bitcoin, which is something that's rarely looked at, I have to admit, I also didn't look at it for a long time, but we can see here that we've already picked up a massive amount of liquidity. And all of this happened after we already had the record crash in crypto. And this liquidity down here at around 82,000 US dollars has actually been open since May 2025. And now we've really triggered it almost exactly to the point by the end. And accordingly, today we're also looking at the area around 70 to 67,000 US dollars, where there's about a billion, a little more than a billion, because that's exactly this price range here at the 0.5 Fibonacci, but also a target level for Bitcoin at the 1.809. Yes, up to the 2.0 target levels. What can we achieve, and where does this 2.0 target level come from for those who aren't familiar with it yet? Here we had this record crash, a structural break, then a recovery, and that's where the Fibonacci extension comes in here. If you're not exactly sure how this works, feel free to check out my channel or the playlist Learn Trading Step by Step to Pro Trader, where I go through everything in detail. Of course, I'd be happy if you subscribe, leave a comment, and give this video a like. That boosts my algorithm a bit, but there I really show you in detail how it works. Let's go back now. That would be my bearish scenario. But what does the bullish scenario look like? Because we don't just want to be bearish. Of course, we have to be careful. I'm making the last trades. We actually had a few Bitcoin trades here. It's just a small position we have open now, but the last one also beautifully hit the take profit. Luckily, we took the take profit because otherwise we'd be back down at our entry point now. So we'll take that out, we'll remove this as well, and we'll structure everything a bit more clearly. You can already see my next bearish entry here, which I have prepared. Of course, I'll share the details of that as well. What we're currently forming here is this bearish pennant, you could almost say, because it's not really a flag, but rather a triangle that's narrowing here. And a bearish pennant, as the name suggests, is actually a bearish continuation pattern. That means we would continue this here, which could move into the target level. It doesn't have to, but it could. However, I still see that since we have a very valid upright bearish structure here, we have the possibility to collect a lot of liquidity above us again. And accordingly, with this small bullish structure that we're forming here, a target level emerges that could be reached here. But here I would be extremely cautious about a massive rejection. If we don't reach that beforehand, I see this as the valid rejection zone that could bring us down here and only then maybe bring us into this area. That's my current plan. Then please don't say now, no, that can't happen and won't happen. Let me show you something briefly. Yes, in case you're too bullish, in case you say, no, you just don't want it to go lower. I'll keep it very short because here we simply have such a valid bearish scenario. The picture speaks for itself. Honestly, if I invert the scale, that is flip the entire chart, and we were now in a bull market, you would say, well, we're definitely going up to these zones here because we have a massive rise, we have a bullish flag or a bullish pennant, we're definitely going up since of course you want to see higher prices. But in reality, the price that's going up here is actually a lower price because I've simply flipped the chart, and accordingly you really should be careful and say, okay, if I don't believe it's going further down, would I believe if it were bullish that it would keep going up? In any case, that would be extremely valid for me, especially because I would also have the next entry levels from the bearish Fibonacci here. Yes, in this case. But now I'm going to switch back to the normal chart, even if that's not what you want. It looks very valid. We have to face the truth, and all of this with the liquidations that we still have below us. Here, a little over a billion. That would mean, if we look at Ethereum later, which we will also take a look at, if we actually drop from 90,000 to 70,000 here, just take a look. Ethereum is currently at around 3,100 US dollars, and see how much is at 2,000 US dollars, estimated to be over 100 billion. Yes, if we add it all up. We'll go through that as well. That means if that really happens and Ethereum picks that up, then Bitcoin would very likely end up in a similar scenario should it actually come to that. Of course, I'll also walk you through my current short-term trade. We're actually inside this triangle of the bearish pennant here, and yesterday we briefly dipped below a certain area, but today I see the possibility, since we've made a new low. Unfortunately, we've made a new low, which isn't great because that was our last higher low, and with this candle here, even if it was just a wick, we broke below it. For me, it's not that valid since there wasn't a candle close below it, but still, because Bitcoin is showing weakness here and making new lows in a smaller structure, I have to say, I see the possibility, at least at this fair value gap at 0.618, as a potential short entry. And that's the Fibonacci level that results when I draw it from up here to down here. Then I see the possibility up to here as a potential short. If we really go short here and close a candle below the ascending trend, I would actually leave it open longer than I usually do for my take profit, but it would look like this. Here's my entry, there's my stop loss, and that would be my take profit. That gives me a 1-to-5 risk-reward ratio, which is what comes out here. And that would already be enough for me, but as soon as we close a candle below it, I see the possibility that we could go even lower. We must not forget one thing, we had a strong candle here. Strong volume candle. You can see that even better on the 1-hour chart. After a long consolidation, which is usually an accumulation phase, if this is marked by a strong sell-off candle, there is also a likelihood that we will revisit exactly those highs where this accumulation took place. For this reason, I will of course also enter a short position here at the 0.786 level, but I'll set my high a bit further up, where my stop loss is, and risk another short entry here to see how things develop. That's my second plan as I see it right now. Worst case, I just get stopped out twice, but that's how it is. But we see that every time after an accumulation zone where there was a strong breakout candle, we ended up coming back to that level again. And if we look at the past accumulation zone breakdown candle, and we came back up to that level again. Here, accumulation zone, we had a breakout, consolidated for a long time, and then came back down with the breakdown. And these long candles where there was always a bit of consolidation and then for a long time, for example, fair value gaps or similar things weren't filled from those long candles, we regularly came back to those price levels and filled them. Accordingly, I also see the possibility here that if the fair value gap doesn't hold as an entry with my stop loss, then I'll use the 0.786 level, which is positioned extremely well at this volume zone, at this support zone, and use that for another short. That's all for Bitcoin for now. I won't do anything more at the moment because the new long doesn't look that good to me right now. The thing is, I already had a long position, which I had already triggered before. That's exactly how it was. It was this area here. That means I already entered here once. But now we've had another entry here, and we also had a different entry as well. That was here too. There we also had the 0.681 level included. So at the moment, there are no open long positions. I've already closed those with the take profit up here, and now I'm waiting for a more valid price structure. Let's move on to Ethereum now. Ethereum is also very interesting for me because I have a long-term entry open. Yes, if we take a look at it, it's actually just based on my Fibonacci. That means from the low to the all-time high, we had the 0.618 as the entry zone here. And at the same time, I took a stop loss at the 0.5 entry. But we can also see here that Ethereum, if we put this in here, has already reached a target zone. We have another one at 2,500 if we take the smaller target zone after the first structure break occurred there. That means in this case, from the low to this last high, where there was a double top and then the sell-off followed. This results in a target zone between 3,100 and 2,500 US dollars. Despite everything, and we need to be careful here, also with Ethereum. You could see that with Bitcoin as well. The price level of 0.786 is simply so valid because of the high liquidity that lies here. Yes, so the liquidation that is here, 100 billion plus, I estimate, if you add it all up, 15 billion, 7 billion, 30 billion, 18 billion, 8 billion. You can see that that might also get triggered to the downside. And I just have to quickly add this in because I only analyzed it again at the end of the video. If you don't fully trust the liquidation heat map, you can always check what other major market participants are doing. And here I am on CoinClass Legend. Here we have level 2 data access. And you can see this cluster down here, right in the area from 2,180 down to 2,000 US dollars. At the current time, we can see it here. There's an incredibly large cluster where people, major market participants, have placed their Ethereum long positions. And we can see here how long this cluster has already been active. You can see that this has been the case since November 21st. An incredible number of new market participants have positioned themselves here. Now let's take a closer look at the details. You'll see how exciting this is when I zoom in here and go through the individual price levels.
The number you see here each time is the amount of Ethereum placed as a limit order in a long position. Here we see almost 2,000 Ethereum, then just under 1,000 Ethereum, then another 800 Ethereum, 1,860 Ethereum, 900 Ethereum, 2,000 Ethereum. So there are thousands of Ethereum in long positions here just waiting to be picked up. And I can scroll all the way down. You can see every time how large these clusters are here. But only the ones glowing yellow represent the high amounts. We also have smaller positions at intermediate price levels. That means everything that's being accumulated here is already an incredibly large amount. And what we also see is this red line here. This is a hyperliquid liquidation heat map position. I'll zoom in a bit more here so you can see how big this is. Yes, the bigger the bar, the larger the liquidation. And I ask you to briefly pay attention to the position up here. When I move down to this line, to this liquidation level, you'll see that someone has 190, almost 191,000 Ethereum in a long position, which will be liquidated at a price of $2,056. So nearly 200,000 Ethereum will be liquidated there, and that's something you really shouldn't ignore. There's a reason why major market participants position themselves here. If we don't reach it, it's not that bad. But if we do reach it, I want to be one of those who don't get liquidated, but rather enter at the same point where the big market players are getting in. And here again, I have target levels if we go in. I will also structure them a bit more clearly now. Let's go back to the 4-hour chart. You can see there have already been a few trades that closed out quite well. Stop loss, the short up here, for example, 1414, is still open. But I also see an opportunity with Ethereum now, which I will take because of Bitcoin. We're right here in this fair value gap, but again, it's nothing different than on the 1-hour chart. Longer consolidation, strong breakdown candle to the downside. Maybe we have a chance here at the 0.5 or 0.618 as an entry so that we can continue to go down from here. Well, chance always sounds a bit negative, but we also have the possibility of seeing lower price levels in Ethereum due to liquidation. We also have the 6-month chart, which is super interesting. And that's also the reason why I will mainly open $2,000 coin margin trades. That means I put my Ethereum into the trade and try to long it with 1x leverage. If we go lower, I compound this position and try to increase the position size, lowering the average entry price. But the next very strong level, the liquidation heat map, is lighting up here again so intensely. 2,528, 3 billion, 2,467, 5 billion. So no matter where I move the mouse around here, we have billion-dollar ranges everywhere from 5 to 8 billion, which go down to $2,300. And after that, on a yearly basis, the $2,000 liquidation zone comes up. And here too, I see the possibility that we could reach that. But even here, it would be quite valid for me if we say we first take out bullish price levels, because now we also have the possibility with this bearish structure that we still have to first move up, reach these target levels, and then continue downwards to keep it going should it really continue to drop. What would be the worst case scenario? That I take a few short stop losses, but my long position remains in profit, and of course my spot positions continue to generate profits with the coins. But here we have a very good alignment. The very first is $3,444. We've already been triggered there. That was the first 0.5 level where I triggered a short, 1414. Very wonderful. Worked very well. And the next one, which also matches up very well, 0618 with the 1809 target level. 3,638 looks super interesting to me. And that's how things currently look with Ethereum, where my next short positions will be. I will also go after the 3,914 if we get there, of course. If I'm not mistaken, you can do that from the all-time highs and the current lows. No, that's not what I was looking for just now. I actually had that included somewhere else as well. Exactly, that was this one here, the 0.786 in this area from this smaller Fibonacci with 0.618 as the larger Fibonacci. But I will give my video updates on that later. That's how things currently look with Ethereum, but on a smaller time frame, I will also take the risk with my short positions here, even though overall this might be a very nice bullish structure, as we can see here. But to risk small positions here, I'm only short as a hedge. I already entered down here at around 2,700 and have a long position. And of course, I always try to take profits here and there, just like I did here when I had a long position, a short position that went into a loss here, but then another short hedge position, which is currently also in profit. And that's how I'm proceeding at the current moment. Apart from that, I still have the trading bots. They're of course active and almost all of them are running in profit. There will be an update on that soon. And in the next video, which I'm preparing, I'll show you how from now on, I'll also be putting my Ethereum into grid bots, into a coin margin futures grid bot so that I can increase my Ethereum holdings. On PIONEX, you'll find the link in the video description. I'd of course be happy if you sign up there.
Then you can also get a bonus of up to $1,000 and receive $50 as a gift, allowing you to trade risk-free. And I've just started doing this now because I don't want to sell my Ethereum in the near future unless the price goes up, by setting up CoinM long grids. If we drop further, I'll gradually open new ones as well to increase my Ethereum and eventually sell everything together when hopefully we see higher prices again. With that in mind, I'll see you in the next video. Ciao, ciao.